May 2016 question number 4A. They asked us a very important question here. What is financial deepening? And then they wanted us to state its advantages and what here disadvantages. Now, deep comes from like extent, deep hole. All right. So in talk of financial deepening, basically this is all about extending financial services to the citizenry by offering variety. Ladies and gentlemen, Kenya is a great country. Kenya is a good country. Kenya is a good country. In terms of financial deepening, like Uhuru Kenyatta did quite a lot. Even Mwai Kibaki did quite a lot. We expect our new government will still continue deepening, making the financial services deepen, get into citizenry until even, for example, people who are in our remote areas, they should be able to really access cheap credit. So when we talk of financial deepening, what are we looking at? We are looking at inclusivity. How do we ensure that every other person will be able to get access to this debt, to these loans? So when we talk of financial deepening, we are looking at government interventions to ensure that, for example, we have banks which are stable. We have banks in this case here, for example, like now we have ABSA, we have Stanbic, we have ETC, and not forgetting, for example, banks that are Islam compliant, First Community, because financial deepening is about bringing everybody into this financial services market. Because if you have got banks that are giving interests in Islam, interest is a haram. So if you would want these financial services here to deepen, become deeper and deeper, then you must think about how do we bring everybody on board. Like, for example, one of the things that happened, which is quite speaking volumes about Kenya as a great country, is this M-Pesa services, especially the Fuliza. Through Fuliza, I mean, even Mama Mboga, you get a Mama Mboga here. In this case here, they're trying to unfold their phones, in this case here, from wherever. And they'll tell you that I have a Fuliza. And this is somebody who is a bit old. And they are very, very good in paying up. So when you are talking of financial deepening, you're looking at how do you diversify your debt instruments, make them, in this case here, easily accessible and cheaper. Like, for example, this Hustler Fund is a great thing. But unfortunately, most of us here are taking these Hustler Fund and they're not paying back, which is very wrong. You are really interfering with the government interventions and the efforts here of deepening its financial services. Because we would want to have situations where even if somebody is in Moyale, Kakuma refugee camp, Loitoktok, would want in this case here, these guys here to be able to get all these financially deepened financial services by government. So then I would want to take this opportunity, ladies and gentlemen, here to share this handout that I read here very fast, because I've explained that financial deepening refers to the process of increasing the overall size and scope of a country's financial system like banks. It involves the expansion of financial services, institutions, and markets, as well as the improved accessibility and availability of financial products to individuals and businesses. Financial deepening is essential for economic growth and development as it facilitates more efficient allocation of capital and encourages savings and investment. Would want, ladies and gentlemen, a situation where the republic, the citizenry, are able to save and save and save and save, and promotes financial stability Ladies and gentlemen, please listen. When we talk of financial deepening, in the whole of East Africa, Kenya, of course, is number one. Our financial services are getting deeper, deeper, and deeper, and they are becoming, in this case here, diversified. Right now, we are talking about what here? The housing fund levy, right? If it is used in this case here in a way that is not that is void of corruption. This thing is a way of encouraging people to save, and of course, will be able to give the citizenry houses. The question is, if you're contributing, say, like 1,000, then what kind of a house will you be able to get? I don't know, but I believe that maybe the government will be having some mabati, thatched kind of whatever. No, I'm joking. I'm joking. Let's get serious. Remember that particular kind of a fund, you can go ahead and even top up your own money, right? But we hope it will not be a scam. The topic that I'm teaching here, ladies and gentlemen, is about financial deepening and the ways that the government can use to reach out to many and many people at the end of the day. Then what are the advantages of this financial deepening? Number one, increased access to financial services. Financial deepening provides a greater access to financial services, especially for the undeserved or financially excluded segments of the population. This includes access to banking, credit. You can see also insurance is one of the ways of financial deepening, and investment opportunities, which can help improve their financial well-being. Two, promotes investment and economic growth. A well-developed financial system encourages savings and channeling those savings into productive investments. Of course, savings will always lead to economic growth, will always lead to investment. Better risk management, yes. With a deepened financial system, individuals and businesses have access to various risk management tools, such as insurance. We have the concept of derivatives, and hedging products. Ladies and gentlemen, please listen. Like this year, actually from last year, during Uhuru's last minute part of his governance, he introduced derivatives market. Derivatives market, for example, right now, we have many farmers now who are harvesting their maize. When they harvest their maize, when we have got a glut of maize, what happens to maize prices? It goes down. So we need a situation where a maize farmer, for example, from Kitale can go to the derivatives stock exchange and be able to hedge. To hedge is to fence and say, hey, you guys, I would want my price to be 5,900 and it shall never go down. So like now we have what we call the Ethiopian commodities market, very, very stable. So we believe that the Kenya Kwanza government will be able to make this thing come into fruition. Right now, it's still a paper tiger. It's on the papers alone. But once in this case, it goes up and running, then very many farmers, including farmers of highly perishable goods, will be able to use this stock exchange to mitigate their risks. By the way, up to there, are we together? Up to there, are we together? First of all, up to there, are we together? Are we together up to there? That this financial deepening can also help us reduce water risks, facilitates infrastructure development. It's about bringing the citizenry here to give us money. When they give money to these banks, when they give money to these insurance companies, the government through treasury bills, through treasury bonds, will be able to get this money and invest. We have, ladies and gentlemen, there. We have, ladies and gentlemen, there. Enhances monetary policy transmission. A deeper financial systems allows for more efficient transmission of monetary policy measures. Central banks can use interest rates and other policy tools to influence borrowing and spending behavior, which can aid in controlling inflation and stabilizing the economy. Ladies and gentlemen, remember, when we talk of financial deepening, we are looking at a situation where these guys will be able to borrow from these systems. These guys will be able to lend money through this M-Pesa, etc. If, for example, there is a lot of high inflation, like now we have a high inflation in the country, what happens? The central bank comes up with a policy. They raise the rate of interest. When the rate of interest goes up, what happens to borrowers? Borrowers reduce. So then there will be a lot of mopping of excess liquidity from the economy. Ladies and gentlemen, liquidity, cash is supposed to be scarce. When you start realizing that everybody is able to get their 1,000 notes easily outside here, and the people are going now to like social media, trying to count bundles of money that they have in houses, that's very wrong. cash is supposed to be very scarce. You're supposed to break a sweat to get money. And I'm so sure here there must be people who get money very easily, unlike me who is shouting here too much and I don't have money. I'm so sure there must be guys who are getting money easily and they can't tell Mwalimu the secret. They can't tell Mwalimu the secret. They can't tell Mwalimu the secret. But as usual, we shall overcome. We shall overcome. So encourages innovation and technology adoption. A developed financial system fosters an environment conducive to innovation and the adoption of financial technologies, what we call the fintech. If I was an examiner this semester, I would have brought something to do with financial technology, fintech, which can improve the efficiency and accessibility of financial services. The last thing that I would want to do today is these disadvantages. Now, ladies and gentlemen, as these financial services companies are also becoming more and more, there is a risk that you can easily be conned. Like right now, we have these guys who are coming to take photos. They are coming in this case with very good cameras and they are capturing our iris. And then they're giving us 7,000 that you go to a mall and then those guys take a snapshot of your iris to identify you. I don't know how. And then they give you 7,000 and people are really lining up. All right. Of course, those guys are harvesting information. They're doing what we call data mining. All right. They're doing data mining. Is there anybody here who has gone for that 7,000? Please talk to me. Is there anybody who has gone for the 7,000? We shall overcome, right? So, of course, that could be a very big platform of being conned. Of course, that's a very good example of a financial depend services product. So there is a risk that people can easily be done what here, people can easily be conned. So increased financial risks. As financial systems deepen and become more complex, there's a higher likelihood of financial risks, including credit risk management, market risk, and systemic risk. If not managed properly, these risks can lead to financial crisis. Income inequality. Financial deepening ni kitu ya wadosi. Umeona kama saizi, for example, there are people here who are trying to apply for the Hustler Fund, they're not able to get. But trust you me, as we sit here today, there must be somebody who has been able to get access to a Hustler Fund up to 2 million Kenya shillings. So there are people who know how to run fast. There are people who know how to run what year and run fast. So income inequality, financial deepening can exacerbate income inequality, as those with better access to financial services and investment opportunities may benefit more than those with limited access. Possibility of over leveraging, possibility of giving people debts that will start choking them, that it is too much for them. Because when someone knows that I can borrow A, I can borrow B, I can borrow from C, then that automatically will lead to what we call over-leveraging. A deepened financial system may encourage excessive borrowing and leverage, leading to financial instability and potential debt crisis. Then we have regulatory challenges. As the financial system becomes more complex, regulators may face challenges in effectively supervising and regulating the various financial institutions and instruments. So like right now, we have what we call the Insurance Regulatory Authority, IRA. So these guys are trying to regulate insurance companies in the dictates of what we call IFRS 17. It's a new standard. It's a new standard for insurance companies. Now, when they went to Equity Bank, trying to ask them that, hey, guys, you also sell insurance, they told them, hey, no, we are a bank. Right, and then that aspect was captured in the newspapers. So when we deepen financial services, financial products, we may give problems to regulators. Then we have speculative bubbles. You know, a bubble, at the end of the day, what do you know about a bubble? A bubble will burst. When you have got too much money in the market, people are borrowing left, right, and center, people will start running, for example, to Kajiado to buy land. When they move all of them there for speculation purposes, the price of land goes up. Of course, and that is a system that may burst anytime. Speculative bubbles, financial deepening can contribute to the formation of speculative bubbles in asset prices, leading to market distortions and subsequent crashes. Then we have financial inclusion challenges. We said, fine, that when you deepen, you're going to include most of these guys. But again, remember the poor of the poorest. The poor of the poorest will not be able to access this money. While financial deepening aims to improve financial inclusion, there may still be segments of the population that remain excluded, particularly in rural or remote areas with limited financial infrastructure. And gentlemen, if you allow me, in the interest of time, please allow me to do this last question. December 2014, question number 5A. They wanted us to explain the key functions of the central depository system, CDS. I'm so happy because I'm teaching students who already have CDS accounts. Now, CDS, Central Depository System, ladies and gentlemen, basically is a system where all the shares that you own, share ownership, all the shares that you own basically are captured electronically. So basically, it's an electronic way of saving documents. Documents here called what here? Share certificates. So when you talk of central depository system, so if Joshua Aura has shares in Safaricom, nowadays I will not be given that physical share certificate. No, the other day I was at my parents' house, and these guys have got what we call title deeds, and there are many. There are many. So what they do, they try hiding them very far. And because they have seen a better number of years, what happens, they're so old, some of them, I mean, they can't even trace them, you know. So if we were to have a situation where even all those title deeds are stored electronically, then that will be very good. And already it has started. They have now developed what we call Artisasa, which will be able to capture all those documents electronically. So when those documents which are being captured electronically as share certificates, bonds, etc., then they go through what we call a CDS, Central Depository System account. So does it have any advantages? Very, very many advantages, yes. So in Kenya, the Central Depository System is a central securities depository operated by the Central Depository and Settlement Corporation, CDSC. The CDS is a critical component of the Kenyan financial market infrastructure, facilitating the secure and efficient settlement of securities transactions such as equities and bonds. Security. It serves as a central repository for electronic records of securities ownership and eliminates the need for physical certificates. We don't want physical certificates, they're bad things. Key functions of the Central Depository System in Kenya include, number one, securities depository. The CDS holds and maintains electronic records of securities owned by investors. When an investor buys or sells securities, the ownership is transferred electronically in the CDS rather than through the physical delivery of paper certificates. Settlement of security transactions. The CDS ensures the timely and accurate settlement of securities transactions. Settlement. After a trade is executed on the Nairobi Securities Exchange or any other recognized exchange in Kenya, the CDS settles the trade by transferring securities from the seller's account to the buyer's account and ensuring that the corresponding funds are exchanged. So settlement of securities. Then we have this thing of doing away with material paperwork. It's called dematerialization of securities. Dematerialization of securities. The CDS facilitates the conversion of physical certificates into electronic form through a process called dematerialization. This process helps eliminate the risk of loss, theft, or forgery associated with physical certificates. Number four, electronic transfer of securities already have been able to discuss this. Corporate action processing. The CDS handles corporate actions such as dividend payments can be done through CDS, bonus issues, rights offerings, and the other events that affect securities value or ownership. It ensures that shareholders receive their entitlement promptly and accurately. Investor services. The CDS provides various services to investors, including account payments, transaction statements, and the updates on corporate actions. Investors can access their account information and the holdings through secure online platforms. Risk reduction and safety. By holding securities in electronic format, the CDS minimizes the risk associated with physical certificates such as theft, etc. Facilitating capital market development, yes, because now we shall have a lot of faith in our securities transfer, in our stock exchanges. The existence of a reliable and efficient CDS encourages participation in the capital markets and attracts domestic and foreign investors, fostering market liquidity and growth. Custody services. These guys here, they can just have an account for you. Tell them, you guys, I don't want to be following these things. Just give me a special account on your portal, and then you pay them, of course. The CDS offers custody services to institutional investors such as banks, asset managers, and the pension funds to hold and manage the securities on their behalf. Regulatory compliance. The CDS ensures compliance with relevant laws, regulations, and markets rules governing the settlement and transfer of OTM securities. Ladies and gentlemen, that marks the end of our discussion. It has been a pleasure hosting you. I believe you will be able to promote Mwalimu on YouTube. And I also believe that you guys will be able to join our special revision block release classes costing 2,000 shillings. Costing 2,000 shillings per paper. All right. We should be able to give you access to our notes, our videos, and the Zoom classes. So of course, if you are interested in joining us, our number is 0793 555 0001. Good thing with us is that we have the experience. You can see, even as I make this demonstration, I'm not, in this case, ladies and gentlemen, guessing. No, these are things that you've done severally. So you're basically giving exposure to the practical side of these things. So the number is 0793 555 0000. 0793 555 0000. Great. The timetable I'll be able to share, unfortunately it's not here, but if you ask the lady, you will get in that number, they'll give you that timetable. Great. Thank you so much. Be blessed. It has been a pleasure having you. Bye-bye.